What a boring day for the stock market today, guys. We had the S&P 500 pretty much break even. The Dow Jones went up 0.25%. The Nasdaq went up 0.1%, and we had the Russell. I guess there was some action in the small caps today. Russell went down 1.1%, as we had the VIX down 0.7%. Gold broke even, and we had silver go down about 0.7% on the day. So in this video, you guys know the deal. We're going to break down the markets, talk stocks, charts, what I'm doing in the market. So sit back, relax, and let's dive into it. Let's not waste any time in this video. So like I mentioned, guys, it was pretty much a straight up consolidation day today. We can see here on SPY, we are holding above the 180 SMA still on the 20-day chart, which means, yes, this little uptrend is still holding as of now, even though we had a massive red day yesterday, which took SPY from about 393 down to about 380 intraday, guys. That was a 3% drop yesterday intraday, which was awful. So we consolidated today, which I guess that's good for the bulls in this case based on the 20-day 1-hour chart. But you guys know where I stand. You know, the second we take out 375, 370 on SPY, that is where the bears are going to start gaining the edge back yet again here on the short-term charts. And you guys know on the 4-hour chart, we're still overall in a downtrend. Same thing here on Triple Q. And pulling up the 20-day chart on Triple Q, we can see straight up consolidation. The uptrend is still holding. We are technically at a higher low right here. So if we do break out, the bulls have a chance to, maybe push us back to about 295, 300 on Triple Q. But the second this breaks, 280, 275, the bears are going to gain, momentum from there. So look at the intraday chart, guys. A lot of choppiness throughout the day, but for the most part, we were flat on the Triple Q here. We were flat on SPY. Let's pull up the Dow, which you can see here. The Dow was very flat throughout the day. And we have the Russell. Let's pull that up. Russell did go down 1.1%, but if you look at it, it was flat all throughout the day pretty much, other than this morning. This morning, we saw a big dump on the Russell from about 9:30 a.m. market open to about 9:45, the first 15 minutes of the day. We saw about a 1.3% drop. Then it dropped another roughly 0.75 after that. So this thing was down 2% in the first 2 hours of the session. Then after that, it consolidated pretty much all day and maybe even creeped up a little bit here into the close, again going down about 1.1%, and that's on the Russell. So the markets, they're kind of waiting at this point, in my opinion, for direction. We got extreme volatility these past couple of weeks, and yesterday, like I mentioned, we had a big red day yesterday. Now the markets are just cooling off, guys, and this goes to show not every single day is going to be a crazy volatile day where the VIX is up 15% or it's down 10%. It's, there's going to be days where the VIX is flat. Most markets, indexes rather, are flat. And today was one of those days. And I bet at some point, Thursday, tomorrow, Friday, the next day, we're going to get some of that volatility back. But today was just one of those chill days. So let me know your thoughts down below in the comments. And make sure to smash that like button and subscribe if you haven't done so already. That really helps me out in the YouTube algorithm. And get your 10 stocks from Moo, each up to $2,500 with a $100 deposit. And you could also get 6 stocks from Webull with any amount deposited. Those are linked down below, and that helps out the channel. And by the way, those free stocks, I think the promos run out here at the end of June, so you have a day, 2 days left to get those stocks. And with that being said, let's talk about some earnings, because we had Bed Bath & Beyond, we had General Mills, and a bunch of other ones report today. So let's go over some stocks. And I'm not going to cover crypto in this video because really nothing much has changed since my previous video earlier today where we covered it. Bitcoin still, last I checked, at about 20,000 roughly. Ethereum at about 1,100. So I'm not going to just cover it for the sake of covering it if nothing really changed, right? So keep that in mind, guys. And that's to save you guys time, of course, and to make the videos a bit more efficient, right? And not to just waste time. So let's get into it. So BBBY, their CEO stepped down. They have a new interim CEO right now. I forget his or her name. I forget if it's a man or a woman. I have no idea. Whatever. It doesn't really matter. And the stock went down 25% on the day. Not only on that CEO news, most likely, but they just got destroyed on earnings. I mean, adjusted EPS, negative $2.83 versus negative $1.39 estimated. So they got destroyed on adjusted EPS. And revenue came in at $1.46 billion versus $1.54 billion estimated. So they missed EPS wildly, revenue, and their CEO stepped down. That's the triple knockout right there for one day, guys. And I'm sure their guidance isn't going to be great. I mean, I'm not even sure if they reported guidance, but from what I can imagine, it's not going to be good. Oh, this is even worse. I didn't see this till now. Q1 same-store sales down 23%. And the estimate was down 8.1%. So not a good day for Bed Bath & Beyond, cutting about a quarter of its value in one day. That is freaking unbelievable. And this is one of the meme stocks, Wall Street bet stocks. And I'm sure the short interest is very high right now. I'm sure, obviously, the shorts crushed it today. So, I mean, let's see. If this thing now, it's in a position where I would say the shorts are vulnerable, in my opinion, because, okay, they can make more money. Maybe this goes down to $3, and mind you, now it's at $5. Maybe it goes down to $4, $3. At some point, there's going to be a good piece of news that comes out, in my opinion, in the next couple of quarters. I'm not saying next week or 2 weeks from now. I'm saying in the next couple of quarters. And granted, if they go out of business, this all goes out the window. But if they make it through the recession, next couple of quarters, there's going to be some piece of good news that comes out. In my opinion, I think this is going to happen. And then we're going to see a ridiculous squeeze on this stock to the point where, let's say it gets to $3, maybe it goes to 12 or something like that. Which, in the grand scheme of things, considering it was $35, $12 is not much at all. But if you look at it from $3, $4 to $12, that's a 3x, right? It might go even higher than that. Who the heck knows? And by the way, this is very risky. This is not guaranteed to happen. This is just a thought here, considering the stock has gotten so beaten down, and I'm sure the short interest is still very, very high. So keep your eyes on BBBY. We had General Mills report good earnings, which I had a feeling they were going to report good numbers, and the stock went up 6.3% on the day. Look at that. It's completely breaking out on the 4-hour chart. We took the highs out from the end of April, early mid-May as well. We hit $75, and like I said, it went up 6% on the day. So at this point, based on the chart, got to be honest with you guys, it is a little bit overbought. I wouldn't chase this right now. But if it comes down a little bit, say it cools off at $73, maybe 72, maybe even lower 70s, okay, maybe I'd consider that as a trading opportunity, right? So I was going to say Goldman Sachs. General Mills, their ticker similar. That's why I almost mixed it up there, guys. I mixed it up. Adjusted EPS came in at $1.12 versus $1.01 estimated, so they beat that by 11 cents. And they also beat revenue, $4.90 billion versus $4.81 billion estimated. And last I checked, I didn't see anything when it comes to guidance. Let me double check right now for you guys. Did I see something about dividend? Oh, they raised their quarterly dividend from 51 cents to 54 cents. There you go. That's a decent increase. We're talking 7-8%, something like that, and that's good considering we have inflation right now. If you got, if you have dividend streams coming in, stream of income from dividends, you want to see that increasing year over year more than inflation. Let's say inflation is 10%. let's round to 10%. It's probably more than that in reality, but 10%, let's say it is. You want your dividend income ideally to either keep up with that in these high inflationary times. Sure, maybe some of your dividend income is not going to grow 10% year over year, but if it could outpace it, that'd be great. If it could outpace the rate of inflation, a company that just upped their dividend wildly was FedEx, 50%. So if you own FedEx, let's say that's your only dividend stock, and maybe you're making, it doesn't matter how much you're making per month, but, inflation's 10%. I think they upped their dividend by 50%. Hey, that's going to outpace inflation. So, I guess maybe there's some crazy people out there that think inflation is 50%. Well, I'm not going to get into that. It could be 50%. Well, it is 50% in certain categories, but overall, inflation, is it 50%? I'm sure somebody out there has made that claim. But anyway, we're not going to dive into that in this video. But going back to GIS, watch for that pullback. And, if we start coming down 70, 75, we are at 75, more like 70 to 72, that's where I'm going to be watching it. We had MKC today as well, which is McCormick and Company. They reported stock went down 1.4% on the day. They did awfully, guys, same as BBBY. They did adjusted EPS of 48 cents versus 65 cents estimated. So they missed by 17 cents, which is awful. And revenue came in at $1.54 billion versus $1.61 billion estimated. So they missed revenue by about $7 million, $7 million, which is not good. And on top of that, to put the icing on the cake, guys, they cut full year sales. I forget exactly by how much, but they cut their full year sales, and the stock's not liking it. We went down 1.4% on the day, and it looks like it's still downtrending under the moving averages, death cross. So I would not touch this, in my opinion. This little rally, I don't even want to call it a rally, but I guess you can call it a rally considering pre-market it was at $78. It closed at 85. This little rebound after earnings we got today, and mind you, it was down way more in the pre-market, right? $78. It was down 8-9% initially after they reported. I'm not trusting this rally, guys. I think this could easily be a bull trap, and we could end up dumping back towards 80, maybe even under $80 share. So MKC, watch out for it, maybe more as a short opportunity, quite honestly. And PAYX is one that I'm looking at. They reported earnings today as well. Like all these companies reported earnings today. Well, I guess the last two didn't, which we're going to go over here in a minute. We had Paychex do adjusted EPS of 81 cents versus 79 cents estimated, which beat. Revenue came in at $1.14 billion versus $1.11 billion estimated. So they actually double beat. They didn't beat crazily, but they did double beat, which is good considering triple BY double missed. Same with MKC. So right now we're noticing on Paychex, this is a bit of a descending triangle, right? Let's be honest here. We can't sugarcoat it. This is a descending triangle. And also head and shoulders, which already played out. You guys can see left shoulder right here. We got the head right here if it wants to work. There we go. And let's see if we can get this a little bit better. We got the right shoulder right there. So head and shoulders, descending triangle, and they did double beat, like I said. So this one's in a wait-and-see scenario, in my opinion. If this falls under, let's say the descending triangle plays out, we fall under 110, 112, there's going to be a big leg down coming from that point, technically speaking here, if it plays out. And that'd be a short opportunity rather, depending on how you want to say it. Doesn't matter, right? So, okay, watch out for that on the downside. So I'm going to put my alert at $110. Mark is at or below here on Paychex. And let's say we take out maybe $120. We start moving out of that resistance here. Okay, maybe we can start going long on it. So for now, I'm going to wait and see approach and see what direction it ends up picking. The next one here is ELV, which is Elevance. Let me see. What was this? What was this called? I just confused myself for a second. Elevant. Yeah, that's right. I'm looking at my iPad here. Anyway, guys, Elevance Health, which went up 2.6% on the day today, and you guys can see it's getting awfully close. It's already above the 50 SMA, but it's getting awfully close now to the top of this channel and the 180 SMA. If this point breaks at about 500, 510, there could be a breakout towards that recent high, which I'm going to put an alert now, 500. There could be a break towards 530 to 535. That's where this could be going. So another one I'm watching is MCD, which McDonald's went up 2% on the day, and this closed above both moving averages, and it's getting awfully close to the top of the wedge on the 4-hour chart here. You guys can see higher highs, or rather higher lows have been made, along with lower highs at the same time. So if we take out, let's say 250, 255, 60 on McDonald's on the upside, mostly 255, I think 250 is going to be a sticking point. There's going to be way more upside from that point. So and by the way, this is all my opinion. Nothing is guaranteed in the stock market, guys. Nothing is guaranteed. Never let anybody tell you something's guaranteed. But again, this is just my opinion. I'm looking at these charts and I'm trying to think to myself, okay, what makes sense here, right? So with that being said, if you all found value, hit the like button, make sure to subscribe, drop me a comment, and feel free to join my Patreon if you want all my moves. That's linked down below. You get morning videos, more access to me throughout the day as well. Literally everything I'm doing is on Patreon. Make sure to also get your 10 stocks for Mumu and your 6 stocks from Webull. All of that is linked down below. And with that being said, I'll catch you guys in the next video. Shorter video today because, hey, again, the markets were boring today, so there's no need to drag things out. I mean, that's not what we're doing here, guys. We're trying to be efficient, right? So with that being said, I'll catch you later. Peace out.